Hey traders, John Hell here. Let's have a market update across all the markets today, and I want to be giving you guys an update on the interest rates as well too, because I think that's a really big important point of what's likely to happen on the second half of this year. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's get straight into it. If you haven't done so yet guys, then make sure you grab free access to that trading course that I've actually just recorded just in the last few weeks. There's 5 phases through there. The biggest mistakes you're making right now, that's the foundations to your success. And then there's chart reading, there's chart reading mastery, there's advanced stuff in there as well. I'd walk you through my trading system. And then there's some other really awesome things that I think is going to really help you when it comes to, if you have a problem over trading and you think you need to trade a lot to make a lot of money, then phase number 4, you're going to really like that when it comes to phase number 4. So go get access to that right now, guys. First link in the description. So let's go have a look at the S&P 500. So the S&P 500 today is still continuing to make a move on the downside. So we have a low, we have this lower high, and we're breaking down, and we're just going sideways through here. And I said in yesterday's video that I wouldn't be too surprised that yesterday's down day, there's a really good chance we're probably going to go sideways through here. So there's a really good probability we're going to see something like that. And then maybe we see something like this again coming down through here. So, and the reason why I say maybe is because I believe we're getting very close to a significant bottom in the markets. And when I say bottom, guys, no one can predict the exact day of when that bottom is, but we can start to get indicators, right? And we're getting those indicators now. And so we can see that that's what's going on this is what's happening now. So again, I wouldn't be too surprised to see just a bit more volatility around here. Looking at the S&P 500, looking at the ES as well too, you can see how it was just a bit of a doji day today. Not really much going on through there, but a bit of a doji day today. But we still are definitely inside of this sort of downward sort of sloping sort of trend line through here, as you can see. So for the ES, or for the S&P 500 to start to become any sign of bullishness in the ES, we would need to start to do 2 things. Firstly, we would need to at least get back above this trend line right here, this one right here. And then because we had so much support on this horizontal line, we would need to get back above here. If we can do those things, right? If we can start to get back above these levels through here, then we're starting to change the tune of what's going on in the markets. See, when I'm looking at the markets, I'm looking at from a two-sided perspective. I'm looking at the big picture, which is this is the big fundamental picture, okay? But then when you start to align fundamentals, now fundamentals, what I mean is like the market is, there's so much negativity in the markets. There's so much fear in the markets. The sentiment is so low, et cetera, right? They're worried about inflation. There's worry, fears. So therefore, we're probably getting pretty close to a significant bottom in the market. Okay, so that's the first thing there. But we never really know, right? When can we get that idea of when that bottom is likely to force? And that's where I go to the second thing, which is then I look at the technicals to really give us that sign. And so the technicals would be, okay, it holds here. I'm not saying this is going to happen, okay? Because some people take what I'm about to say like, oh, well, he said it was going to go up. Oh, he said it was going to. I was like, I'm not saying this. I'm saying if we do get this scenario, then it's going to be bullish. But until we do get that, the market is still bearish. So right now, the market right now on a short-term technical level is bearish. But if we start to get a rally up and then we start to come down and we start to create some sort of an upward trend, we need to wait for this first. All right, that's got to give us a major probability of then this picture that I'm seeing here start to happen. Make sense? So we can see that through there. So, and then also looking at the YM as well. Bit of a nothing day today on the YM. Again, you wouldn't expect too much out of this. So we had a move up and a move down. we are get pretty long in the tooth here. So again, I would expect just a bit more volatility. I don't expect too much of a significant move this week now. It's actually really interesting just looking at what's going through here. So I wouldn't be too surprised if we started to see something like this, just a bit of a sideways movement through there, and then we can see what's going to happen through here. But once again, the Dow Jones really needs to get back above the, what's that? Roughly around, say 30. So this is obviously the futures market here. So the futures market, you can see that this major level of support back here on the Dow Jones has now indeed become really significant support. Actually, 2 levels of resistance. Support now becomes resistance. And so we have resistance through here, and then also this trend line. So for the Dow Jones to get any sign of bullishness back into the markets, any sign of bullishness, then we would need to start to see something like this, a complete turnaround, and then we start to see something like that. Until we get something like this, or at least break above that 32,500 area, right? Until we start to get that, then the sellers are still in control. And when I say sellers in control, we are in a stair-stepping movement, right? So that's the big thing we really need to keep an eye out for when it comes to that. So just looking at a bit of an update on the fear and greed index, and we can see how that we're still really over the extreme fear, and this is where major bottoms start to really. This is where major bottoms start to really come in. The problem is that when we get this reading, we could be a couple of weeks away from the bottom, but we're getting very close to a bottom. We just don't know the exact day. So, but when we get this, the last time we got this much over fear, or this much extreme fear, was when the COVID stuff was happening. But then guess what? When we did get down here, we actually stayed down. The extreme fear reading stayed down here for about 2 to 3 weeks. But then we bottomed, and then we went for a big move. Okay, so that's scenario. The technicals right now are saying short term, but I'm waiting for that technicals to start to turn around. And the reason why is, one, the fundamentals is saying we're getting ready for a bottom. So over the next couple of weeks, I'm waiting for that change of trend in the markets. So we see that through there. And you can see over the timeline as well too, that where we are right now. So we're starting to get this really sort of down here. And again, the last time we got this was with the COVID situation. So and then also looking at the interest rates. Let's bring this up to here. So if we look at the actual interest rates, so the interest rates here, the 10-year is actually starting to falter out. We're starting to slow down. And this is something I've been talking about now for the last week, is that I wouldn't be too surprised to start to see the interest rates start to actually have a pullback. And there's been 2 reasons why I've been saying that for the last week. The first reason is that we've just been so overextended to the upside that now we're creating what? We're creating some sort of a shoulder formation. And then now we should start, it's a bit of a what we call a round top formation. And when we get overextended and we create a round top formation, that's when we tend to get at least a pullback to neutral. Neutral is roughly around a 50% retracement of the low to the high level. So if we actually bring up the good old Fibo tool and we go from the low to the high, you can see how the 38% is there. So let's actually just take off the 38%, and we're going to use that one through there. Yeah, right. So the 50% level is actually around about that sort of 2.5 level on the 10-year. So I wouldn't be too surprised to actually see that happen. Now this support level back here, if I bring up my weekly charts, let me go back to here for a minute, okay? So this first, actually, let me take the Fibonacci off now. This first support level here, if I squeeze my charts up, what that level was there is that was just a significant level of support and resistance back here. There is actually a little bit actually up through there, isn't it? Around the sort of, again, just the 2.6 mark through there. And then we can see, but if you look at the weekly charts, we can see how that we have this level here, which is a major support level. We also have, I'm just noticing now, we also do have this level up through here, which is a key level of support. So we may be getting ready to maybe even having a pullback down to here, but I wouldn't be too surprised to see this thing come down and then start to come back down to around about this level through here, which is again that 50% retracement level, looking at that on the 10-year. Now looking at the 30-year as well too, looking at the 30-year, we can see how that we've had this high, lower high, and again we're starting to potentially falter through here. But look how vertical this has been once again. See how vertical this thing has been, and we're starting to get into this level up here, which has definitely been strong area of resistance around to that 3.2 mark. Has definitely been a lot of resistance back here. So we're hitting that right now on its head, and we're starting to reject it right now as we speak. And so we can see this movement up, and now we're starting to potentially get a bit of a leaning head and shoulder formation, right? So we have this shoulder, head, but we're also starting to get a potential lower high, right? We've made higher highs and higher lows all the way up, but now we're getting a potential lower high. So if we start to break out of this level down here, there's a real good probability based off this pattern that we're going to start to get down to the 2.6, maybe even down to the 2.5 on the 30-year. Now, I don't know what's going to cause that, but it's just the market talking to me. And based off the 2-year as well too, the 2-year looks like it's starting to potentially getting ready to roll over. Again, we've been really strong in the markets. You can see how it's been stair-stepping up all this time, stair-stepping up. But now look what's happening, potential double top. We're starting to roll over, and now we could potentially start to see the 2-year start to really pull back quite hard out of this here. So I wouldn't be too surprised if the 2-year now is, again, we got very close to 3%. But I wouldn't be too surprised over the next, because we are so overextended and the nature of how markets work, overextended means we're going to likely get a pullback. So because we're at that level, I wouldn't be too surprised to see sort of the 1.6 level, 1.6 level, maybe even down to as low as 1.2 on the 2-year rates through there. So that's what I'm seeing through there on the interest rate. So if we see, I'm starting to see that when it comes to that, we are getting a bit of an inflection point with the inflation, and we're starting to see that. We're starting to see potentially a slowdown in the in the interest rates as well too. So as that starts to come down, I believe that's going to start to create a bit of a floor across the markets through there. So that's what I'm seeing right now when it comes to that. Now, what I do, that's what I'm seeing right now. The way that I see this thing playing out is inflation's not going away. Okay, it's probably likely to slow down for a little bit, especially the rest of this year. It's probably likely to slow down and maybe peter out a bit. But then inflation is going to come back in with a vengeance, and it's going to come back even harder next time. Now, why do I say that? Is because in the next recession, they are going to print a lot of money. They're going to do the same thing they did in COVID. Okay? But you think COVID was big. They're going to do 3 to 4 times, maybe even bigger, of a stimulus package to help the economy. They're going to do the exact same thing that they did with COVID as they did then. Now, 2 things to be prepared for when that happens. Okay, firstly, is that when that happens, we are going to see a significant strong bounce in everything. Real estate, because interest rate's going to be low. Real estate, we're going to see a significant bounce in the stock market, commodity prices, gold, silver, mining stocks. Everything is going to see a significant strong bounce. We're going to see an initial spike in savings, retail sales, all that sort of stuff. So businesses like myself, I'm getting ready for those days, because when the government prints money, guess what? It goes to people like me who have businesses already to provide a service. It just happens. You just see it through there. So when that happens, for businesses that are prepared and ready, they can start to absolutely crush it from that. But then that's when the real inflation, that's when the rampant inflation is going to start to come into it. So this is just history repeating itself, guys. If you look what's happening right now, this is just history repeating itself. Look at what actually happened with the 70s. And we're starting to go through the same thing right now when it comes from the actual 70s of the inflation and what's going to happen and so on and so forth. So if you want to know what's likely to happen this decade, just look at the 70s through to the 80s. What happened? 70s, we had a spike in inflation. Then it flattened out for a little bit for a few years. And then we had another, and then we really had a big spike. Gold took off like a rocket, et cetera, et cetera, et cetera, right? So that's what's coming down the road. And so that's what I'm seeing through there. On a short-term level, let's actually go look at gold on a short-term level. And gold actually had a bit of a bounce today, a bit of a strong bounce. It's actually, I was actually noticing this last night watching the futures markets, and I noticed that the markets were weak, but gold is actually starting to get a bit of a strong bid of where we're at right now. So nothing has changed yet. Okay, we're still at this resistance level here. Actually, let me just take this off here for a minute. So we are very, very, very sort of overextended through here, as we've been having a very big move down. And now we're getting this level through here. In fact, let me actually bring up my short-term moving average so I can see. Yeah, so now we're getting potentially the first candle close above my 9 moving average. That tells me that we could possibly this move to the downside is coming to an end, and we're either likely to go sideways now, or at least get a pullback towards these levels up through here, which is around that 1,900 level on gold. So expect a rally in gold, but nothing has changed yet. What do we need to start to see things changing in gold? If we do get this is scenario number one. Scenario number one is we actually rally up and we hit it, and then we get a bit of a rejection, but then it finds a bit of a base, and then we start to get a very nice move back up like that. Okay, we start to break through this key levels of significant resistance through here. This support now becomes resistance. We need a significant, once that starts to happen, we're now starting to do what? Low, higher low. We're waiting for the market to tell us that some sort of a trend is establishing. If that doesn't happen, then we could just do that, and then we just start to do this again. Okay, that's the possibility. We need to look at both sides of what the possibility is. But if we get scenario number one, which we start to get this breakout candle through here with the higher low, we get something like this happening, then there's a higher probability now that now we're starting to form a bit of an upward trend, and this downward trend is then likely to be coming to this downward phase through here we've had over the last couple of months is coming to an end, and then we're getting that. I'm not saying we're getting that. I'm just getting my mind mentally prepared to say, if gold is going to start another bull leg in the markets, what would I want to see? And this is I'd want to see that. But if we don't, and we start to get a rally up through here, and especially if it's a weak rally, right? If we start to get something like this, I mean, it's just a sideways movement like this, it's not really strong. There's a high probability we're going to start to see something like that on a downward leg through there. So really, really, really strong on there. Now, that's the short-term TA level traders. On the long-term picture on that, what I just said a minute ago about this is just the 70s repeating itself. Mark my words, guys. By 2030, we are going to be saving a $5,000 plus gold. Now, there's no guarantees of that, okay? So don't be YOLOing in the markets. But by 2030, did you hear what I just said there? By 2030, there's going to be a lot of swings in there. We're going to go through another recession, which is going to hit gold really, really hard. Then we're going to see another significant bounce, and all that sort of stuff's going to happen within this decade. But by the end of this decade, we are going to see gold take off like a rocket again. Everybody right now that I'm seeing, like their thoughts, their thinking around gold is useless. Gold's horrible. Gold should have gone up because of the uncertainty. Gold should have gone up because of the inflation, et cetera, et cetera, et cetera. So therefore, they're saying, oh, gold's nothing anymore. Gold is just nothing. I'll put it this way. I'd rather be in gold in the last 2 years than rather be in the crypto market in the last 2 years. Because you know what's happened, right? So again, nothing against the crypto. I've always warned people not to get involved with crypto, and I'll get to Bitcoin in just a minute. But looking at gold, this is the left soldier. This is the thing that not many people are focusing on. Have you ever noticed in life that the things that little quiet thing that's happening in the background, then suddenly boom, it starts to take off, and guess what's going to happen? We're probably likely to start to see some really good upward movement over the next, say, 6 months out of gold. And once we start to break above these significant highs, right? So once we start to really get a breaking above these significant high points, I'd say probably around about, say, that 2,000 level. Once we start to get a really good breaking above that 2,000 level, gold is going to go through a massive move. It's going to go through an extraordinary quality move. It's just the way the markets work. because once we actually, it's the simple saying of, let me take all the trend lines off the screen here for a minute, and then I'll take the 9 that moving over to you. It's the simple, guys. It's the simple thing is that look how long this is. Gold is going to make an extraordinary quality move to the upside. I don't know when, but gold is going to make it a massive move. We could spend another 6 months doing this, doing something like this. I don't know. But once we start to do something like this, and once we start to do something like this, mark my words, guys, this all here is what's called fuel. There's been almost 2 years of gold doing nothing. Please do not, I don't care what you think, what you hope, or what you're fearful of, or what newspapers or rejuvenating bullshit that you've been hearing from other people, do not just stop thinking about gold. Because the best trades that I've ever had in my trading career have been those silent trades that never did anything, right? And if you were focusing on Bitcoin before the last couple of years, you would know Bitcoin did the exact same thing. It just did nothing. When the market's doing nothing, that's the time to start to really focus on it, because we could be getting ready for a really big move. And the longer this goes sideways, the bigger the move is likely to be. So, and I've always had a 3,000 target on gold. So don't forget about the good old gold, the shiny metal, right? Or maybe they're both shiny metals when it comes to silver as well too. So silver right now is doing what? Silver right now is actually having a little bit of an up leg today. If we bring up the 9 moving average, you can see, we're now starting to break above it. So now we're probably likely to get a bit of a rally out of this level through here. It doesn't mean that the sellers are still in control, but it just tells you that this downward leg right now on silver is coming to an end. So we're probably likely to do sideways, or I probably would say that we may even get ready for maybe even a bit of a bounce. But what actually happens with this bounce? So there's 2 scenarios. If we do get a bounce, 2 scenarios I'm looking for when it comes to silver. The first scenario is we get a bounce, and then we just completely fall off a cliff like that. That's scenario number 1. Scenario number 2 is we get a bounce like this, but then it pulls back. But then suddenly it stops. And then we start to build a base, and then we start to go up like this. And then we start to break past these previous highs. And then now we have what? This is a low. This is a higher low in the markets. If we start to get something like this, then there's a high probability, just like with the gold scenario, that we are likely to start to see really big upward moves from here. High, lower high, higher low, and a really big upward move when it comes to silver. So this is what we're waiting for here. We're waiting for some sort of a high low. We're waiting for that trend to change in the markets. And what I truly believe, and if we go to the weekly charts on silver, is once again, you can see here when it comes to this silver chart, that we are really basically, if you think about it, we're just basically in this overall sort of bear flag through here. Mark my words once again, traders, okay? When silver starts to do, I don't know when this is going to happen. Once silver starts to do that, all right, we start to really get a breaking above the 26 level, okay? Once we start to do that, then it is game on for the bulls. And silver, especially silver, is going to take off like a rocket. Now, I don't know when that's going to be though. That's why we need to be watching, just watching the charts unfold and watching what's going to happen. Because this is really, really, really important, because the big moves come from when the market doesn't do anything for a while. And this here, once again, this is 2 years of doing nothing. It's also a big bull flag, as you can see. And then it's 2 years doing nothing. What's that there? That's basically, say, what's that there? $12 up to, say, call it $32, 10 or 30. So that's, what's that? That's 8, right? 2, 4, 6, 8, 10. No, what am I doing? Here you go. Yeah. 2, 4, 6, 8, 10, 12, 14, 16. 16? 18? Around 30. Yeah. Around, say $18. Call it $20 to be simple. So if that's the case, then the next level should be, what's that? 30, 40, 50? So I'm just doing the same sort of, the whole flagpole thing. Actually, you know what? Just to make it simple, let's just do this. let me just do the flagpole, and then we'll just see what happens, right? All right, there we go. There, this long-term trend line is also a really long-term trend line. So once we actually start to break out, oh, there you go, from there to there. Is that right? Yeah. All right. So once we actually start to break out, we could start to see a 40, which I wonder if that's actually. Oh yeah, look at that. And that's actually that the projection is actually also this resistance level back here in 2011. Really interesting. But again, traders, that's not going to happen today. It's going to take many months for that to potentially start to form, okay? But as you can see also, that this is that long-term trend line coming down. As you can see, the big picture is we're squeezing up through here. So we're going to make some significant moves out of silver, I do believe. So let's go have a look at the GDX here. The GDX, and GDX had a bit of a bounce today. That was expected. Same sort of thing when it comes to gold and silver as well too. We've had a bit of a thumping down through here, and then now we're actually getting a bit of a bounce. Once again, we're probably getting a close. Yeah, probably getting a close by the 9. So we're probably due for some sort of a pullback, but it's going to be really interesting to see what actually happens after that. GDXJ as well too. Right, we can see the GDXJ. Just a really big thumping through here. So, but the caution bells need to be still on. Let me go to the weekly chart here for a minute. The caution bells need to be on now, because I really was thinking, okay, we've got to break above, and this is where, right, we had this high, lower high, and then we started to get this higher high, but we never got the higher low. I was always waiting for that higher low here to pick up, and we never got it, and now we've got a thumping straight back down to create like a bit of a triple bottom, or maybe even a slight lower low. That's actually still bearish, right? We may get a rally through here, and then it's short-lived, and then we start to roll over through there, and that's actually for the rest of rest of this year. So we really need to watch out for that. We didn't confirm the upward trend. It just had a bit of a higher high, and then we rolled over from there. And the last thing I want to look at, which is the VIX. And the big thing that I'm looking at, or actually the second last thing that I want to look at, the big thing I'm looking at with the VIX is that we're still having problems around the $40 level. And I feel like this is me using my feelings with the markets, which is never a good idea. But I believe we need a capitulation move, and we need to start to see this thing spike up a bit more before we start to find a true bottom. I believe we need to start to see something like that, like some really big fear. That's going to cause the market to really pull back hard when that happens. So I believe that's what's probably likely to come around when it comes to the good old VIX in the markets through there. And last but not least, guys, when we actually have a look, let's have a look at the crypto market. Right now, the crypto market, the Bitcoin right now is right at this significant level of support through here. Real strong level of support. We're just going sideways through here. But if we have a look at the moving averages, like the 20 moving average, we are in a strong downward trend. So trying to buy Bitcoin right now this is for trading purposes, is very, very risky. And it's not a good idea, because we are in a downward trend, okay? And we are now just going sideways. This is what you don't want to see this when it comes to buying activity, right? You want to actually see some sort of a V bottom coming out like that. But now we're getting sideways movement. There could be a possibility where we just go sideways, wait for the moving average to catch up, and then we go for another move again when it comes to Bitcoin from there. So, and also the big picture as well too is still really, really, really significantly down. Nothing has changed. We're actually in a very big, strong downtrend. We have a low. This was a higher low, then it made a lower high, and then now we made a lower low and a lower high, and now we're starting to roll over from here. So you can see a really big downward trend now. And if you're having a look at this, when you're looking at sort of trend lines, this is the level through here. If we can start to break above these levels through here, then that may be a bit of a bullish scenario. But now we're starting to have a lot of problems through there. So there we go, traders. I hope this really helps you out. Just be calm, be patient with these markets, and remember, don't keep an eye on those markets that no one wants to talk about, and that's why gold, silver, and those mining sector, especially gold, keep an eye on those markets over the next few months, because when they start to move, then just like the whole thing about cryptos in the last 12 months, we're going to hear the same thing again about the metals.